Good morning, Uche.
Yes. Now, looking at market performance yesterday, certainly it was flat. Activity down about 38%. What's your take on how the market performed?
Yesterday, we saw the market gain just 4 basis points up, but volume of trade compared to what traded the previous day was down 38% and value was down 15%. What we've witnessed in the market this week is we've seen some profit taking in the market, but cautious buying at the same time, with investors willing to pick up stock, picking it at gradual and cautious levels. And we've seen some profit taking. Looking at the market has been up close to 28% year to date, and I guess it poses good potential for investors that have come in at good prices to take profit. And those that are willing to take are just careful with the way they pick up stock going into the end of the year and positioning themselves against the next year and full year result of most corporates. So I guess we might actually see this trend continue to market for a while and cautious buying.
Okay, well, Idris, looking at how the market has been performing, I mean, it seems to me like the consumer goods sector is a sector that has been driving performance with the likes of Nestle, performing quite well. For you, which sector really drove performance on the market this week?
This week, we've seen Nestle trade active in the market. The prices dropped down to a level of 570, and we've seen it going back up again up to 600. And we've also seen tremendous demand in Nestle, with investors trying to position themselves. And this week, Nestle declared a dividend, interim dividend of £1.50. But I guess investors are happy with that, and they're looking forward to a good payout, dividend payout at the end of the year. So Nestle has really been one of the stocks driving the market as well. Nigerian breweries as well. We've seen interest in Nigerian breweries, with Nigerian brewing gaining few points yesterday as well. And this has also helped the ASI in gaining 4 basis points and means profit taking, which we've seen in the market. So I believe the consumer sector has really done well for the market. And on the banks as well, we've seen activities in the bank, though there's been a drop in some of the names in the banks. For instance, we've seen the First Bank trade as high as 17, 18 naira, and yesterday we saw it trading at 15 naira levels. This can be attributed to profit taking, and we've seen investors coming in to pick up the stocks at this level since they find it comfortable entry points.
And Idris, I mean, I'm curious, year to date, so far the market is at around 27.14%. Week to date, like you said, it performed, it was actually down 1.35%. Now, looking at the market's performance so far, is it in line with your expectations over at Stanbic? I mean, some other analysts said they thought in Q4 the market would be hovering around 30%. So what's your take?
Yeah, we share the same view. The expectation that the markets may close at the 30% yesterday at the end of the year. And looking at it at this level of 28, I guess it's not far from where we expect it to be. Yes, we've seen the markets at the end of Q3, the market really rallied on a positive note. And, you can't leave out the activities of speculators from the market. Speculators will come in at good prices, and when they're comfortable with the profit they've made, they will definitely sell to take some profit. But the long-term players will definitely come in to pick up stocks when prices are where they feel is a good entry point for them, and this is the trend we've seen in the market. And for me, I expect the market to do better than where it is at the end of the year.
Right, so if you expect the market to do well, I mean, I just want to throw something by you, Idris. Yesterday, the CBN governor at a bankers forum yesterday mentioned the fact that in 2013, the capital market must contribute to the funding of infrastructure. How realistic do you think this is, given how the market is performing so far?
Well, the market is gradually is coming up, and we've seen yesterday the market up 28 basis points. With the capital markets supporting infrastructural development in the country is a welcome development, and I believe it's a good step in the right direction for the economy. It will encourage private and investors to participate in the growth of the economy as a whole and having a stake in it. And I believe it's a good investment window and opportunity for those willing to invest in the infrastructure of the economy. So I think it's a good one, and I believe it's something that will work out if properly implemented and put in place.